All right, guys, welcome back to another video. And if you're new here, thanks for stopping by. Hit the subscribe button. And to the returning folks, like the content up. Okay, today we're looking at the insane blow off top that has begun. It is already building up. You can see it with BTC. We can see it across the stock markets that are less than 3% away from new all-time highs. The global stock markets are also away or in new all-time highs. Some of them are getting very close to new all-time highs. And then you can start to see some of the cracks that are forming in terms of how this whole cycle is going to peak and then collapse. So if you have been following the channel now for several months, maybe even years, you know exactly what we are looking at. However, there have been some developments over the weekend. Of course, we had the end of week data come in for Bitcoin and the crypto data, which I want to get to in today's video. But if you are new, don't worry. I'm going to get to all of the information in today's video. So first things first, let's have a look at BTC and where it has landed at the end of the week. Just under $106,500. That for us has been a key resistance level. Now, I don't think it's going to be anything that holds the market up indefinitely. I think it's eventually going to break past this 106,000. But as you can see, over the last week, it has tested it twice and then failed. The reason why I think this is a very significant level is that it's happened before in the past, and we hadn't seen any closes above that level to a greater degree. Basically, I'm looking for 3 weekly closes. Now, this hasn't occurred. We got one almost dead on it in May, one above it when we got to the new all-time high, and then it quickly reversed underneath 106,500. So that's a key price level for BTC over the coming weeks to see if it can start to consolidate above this level. In the short term, it looks like we are setting up for another healthy correction, whether that correction stops here at 100 or if it comes down a little further, it's still in the strong half of the price chart. And that price chart is your 50% level from the $74,000 low up to the 112. And that price is around 93,000. So any price action in this zone, according to my own analysis that I use for my trading and investing, we're still sitting in the strong half of the tool. Pretty much good support there in the mid 90,000s. If there is a drop into this zone here, you can see there wasn't much price action happening between 87,000 and 92. It pretty much just shot straight through in April, right above that level. And on the way down, it basically broke straight back down, bounced and then broke down again. If the price does come back into that level, I'd only want to see wicks into this zone between $87K and $93,000 before closing above that level to continue with the strength. So in the short term, sure, we've got some rejections at 106.5. Medium and long term, there's still a lot of strength to the upside in this chart. And we're seeing it with the S&P 500 that continues to grind higher, as we've been covering with our red line here. That's the 5-year cycle, looking back to the COVID dump. And I got this coming up in just a sec, as Elon Musk is also calling for some recessions, and I don't think that's going to happen again. When Elon Musk talked about the recession back in 22, which didn't happen, I'll get to that in a moment. Essentially, we're watching how these markets continue to climb higher and how this insane blow-off top forms. And it forms time and time again when these things happen. And that's why I was talking about this zone back here, when you had a lot of talk about recessions and the build-up in price action. And this one happened for a long period of time. You can see the support and resistance around 4,200 points for the S&P 500. Sure, it went down, it came to 3,500 points for a day or two, and then managed to remain around 3,800 points. So there was a lot of consolidation happening between 38 and 4,200 points, basically a 10% range. And then once the ceiling was lifted, pun intended, because right around this time here, and I know many people may not have been trading the market or they don't remember what happens in the market, but this period, April, May of 2023, you can go back and check your news headlines. This was the debt ceiling, where the US was either going to raise the debt ceiling or they were going to shut down. I think both ended up happening. Maybe they shut down for a day or two or whatever period it was. Either way, it doesn't matter at the end of the day because the debt ceiling was raised, therefore more money printing and essentially more debt. So the market pumped higher. You had a lot of shorts coming into the market because they saw previously 4,200 points was a pretty good level to short, to try and bet that the market was going to collapse. They were entirely wrong at this stage, and then they all had to cover, meaning they had to buy back because they were in a short position. They had to buy the market to close a position, and that pushes the market higher. And you can see it happen again at the previous all-time high. Well, that's previous highs there at 4,600 points. The previous all-time high was 48. Happened again right here. And then you can see as they keep trying to short the market, you get this big burst up and a big burst up as they short previous resistance. And again, it seems like we might be getting to that stage here where you're in the 6,000 point level. Maybe when we get closer to 6,150, 6,160, as there was 3 previous tops there, then you start to see a lot of shorts pile up, and then you get that explosion to the upside. So in terms of this, insane blow off top that's forming. Now, I think this is going to be beneficial to BTC. We've seen it pretty much every time in the past when the S&P 500 has gone on a nice clean run to the upside. You can see pretty decent moves here for BTC. BTC is the orange line in the background. The S&P 500 is the candlestick chart here on a monthly chart. So it's on a long-term time frame here. And in these occasions, you can see Bitcoin's basically winding up, winding up, winding up, and then it goes on a pretty significant run. Now, of course, it's on a logarithmic chart. Otherwise, the data would be too hard to read. You can see it back down here. Pretty much right through those periods is where you get that big move up. Again, nice big move up. And we're currently in what I'm calling anyway, that Bitcoin bull market as it breaks through those all-time highs. And the S&P 500 is also building up into a relatively strong position to then test those highs again. Now, the other line you might notice here on the chart is the white diagonals. This one here is connected to extremely important points in the chart. It's the top of the 2007 cycle high, so pre-GFC cycle top. And then the next line at the bottom here is the GFC low in 2009. This period, everyone was still extremely scared of the market, that it was going to have another major recession, and you can see it just keep climbing higher. And then where it's connected to is the 2022 top and the 2022 low. And so far, we've been bouncing between these areas for the last couple of years. And on this last tariff dump, we got very close to that low, which is pretty far away. Now we've bounced a little higher. So either we use this as resistance again, but in terms of where that price is, it's still got a fair bit of room to move. That's another 5% to the upside, 6,300 points. Maybe that happens over the next couple of months. Or we hit that level and break through. In which case, if it breaks through a logarithmic resistance line, then it can start to send shit absolutely wild. So parabolic to the upside. I want to wait and see what happens when we get there. But either way, I think there is further to go to the bull market, to the upside here for the S&P, which of course is going to be also good news for BTC, of course, according to the way I look at the market. The NASDAQ is getting even closer to its previous all-time high, putting in a third highest weekly close. Pretty damn good after the last 8 weeks of move to the upside, and just 2.5% away from a new all-time high. And according to the data, it looks like there's further increases to be had for the rest of the year, especially after a 5% May. So that's what we saw this year. We got a 5% May, and the next 12 months, 100% of the time. Now, I'm not calling for a guarantee, but the data suggests there is a very high chance. Maybe it's 99%, but here it says 100. We got 12 months ahead. So basically going into May of 2026, we've seen on average a 20% increase in the price of the S&P 500. The median is 18%. And you can see the lowest one here was 1990. That was 8%. So 8% from the time of the signal. So end of May, 1st of June. 8% up from that point in the chart is pretty ridiculous. All years since 1950, you've got 9%, and the median is 10% here. So that's looking at these 6 data points. And then in this case here, you're looking at all years from 1950, which has a 74% hit rate. So that's one of the first pieces of data there that suggests we've got further to go in the upside here for S&P, which I think is going to be beneficial to Bitcoin as well. On top of that, I think everyone's seen this by now, so I won't spend much time on it. It's $4 trillion bill that Donald Trump's doing here with his big, beautiful bill. It's like 3.8 trillion, and then they're going to spend another 1 trillion somewhere else. There's just trillions upon trillions of dollars that the US government continues to spend. And of course, that comes into the US national debt at $37 trillion. Spending has gone up. The Doge clock is still bringing back money, but as you can see, it's not basically keeping up with the US national debt. There is no way, I think, that the Doge is going to reduce this national debt. And I think the market already knows that now. In the meantime, Elon Musk is obviously pissed at this and is claiming that there's going to be a recession in the second half of the year. I think no. And this is not to say that Elon Musk is completely dumb. Not at all. Obviously, that's not the case. But in terms of investing or cycle analysis, I don't think he's on the money here. And he hasn't been on the money before, like in 2022, October 2022, Elon Musk was calling for a recession. Where was that? That was at the low here. October 22nd in 2022, right here, expecting a recession in the spring of 24. So the spring for you guys in the Northern Hemisphere is what, March through to June. So he was expecting a recession right there. Absolutely, entirely wrong. Sure, that was one time he tried to call it, but he was calling, and I'll just add on top of this, he was calling recession similar time frame. So right here in June, as to Cardi B. She was also asking for a recession. So if you're on the same side as pop, I don't know, singers and whatnot, thinking there's going to be a recession, I don't like your chances that you're going to see a recession at the time that I guess the general populace also thinks there is going to be a recession. And of course, clearly there was not. And now here comes Musk again talking about a recession in June 2025, and he thinks it's going to be in the second half of 2025. Even so, you're probably still going to see prices go higher for the mere fact that there is going to be more money coming into the system. And how the hell can you have that recession at this stage of the cycle if there is more money coming into the system? Now, that doesn't mean that the second half of the year is going to be an easy ride. Our predictive cycles here suggest that it might still have a bit of a choppy move, especially with a pullback in August and October before a cleaner end to the year. But as it currently stands, this is our 20-year cycle. On the 5-year, you've got a little bit further upside in a cleaner fashion because we had seen quite a significant dump into April. But around the globe, we're also seeing insane blow-off tops, either in the making or actually happening right now, but people don't feel like that's the case. Look at the case of Australia, up 19.5%, a fraction away from a new all-time high. Canada, new all-time highs. That happened 4 weeks ago. They're at 19.5% as well. Brand new all-time highs breaking out of the previous top set before the tariff crashes. The top 50 in Europe getting close again to new all-time highs. And these highs go back 25 years now. So the previous top was 2000, March 2000. Yes, 1999 was the year before, then 2000. Okay. So we're getting very close to that high again, and we just broke it just before that tariff dump. That's, of course, being led by the UK, getting very close to another new all-time high. It just had its highest weekly close in history. It's up 17.6% from the tariff crash. These are large economies around the world, and they're all showing signs that they are really running up very hard, very fast. Eventually, the whole thing, the build-up is unsustainable. But in the meantime, do you really want to be on the wrong side of this trade? Either A, not in the market at all, or B, trying to short the thing if you have that experience, basically trying to bet that it's going to go down. In either case, shorting it, you're obviously going to end up with less money, a lot less money. And the other case is if you're not in the market, well, then you're basically just losing out to inflation. So you've still got some purchasing power, but that purchasing power becomes less. Better position to be in than trying to short the market on the way up. And the blow off top, that's what they look like. That's what a chart looks like when it goes into a blow off top fashion. Yeah, sure, you can put it on logarithmic, doesn't look as impressive, but when you look back at the previous cycles like 2000 and the late 90s into 2000, huge blow off top, massive crash, and then another test at that top for the end of the cycle. So again, another huge move from 2,000 points to 8,000 points in just a few years. This was for Germany, of course. Big correction into a higher low. And then again, here we are, another insane. To me, this is absolutely insane how crazy the markets are going. 32% here for Germany since that low. This is the tariff crash low. I can keep running through the rest of the global stock markets. In this case, Italy, almost a new weekly all-time high price and closing price. But this is a 20-something year fresh high, getting close to the top of 2007. Let's take a look at China, also pushing higher, not at a blow-off top stage yet, but it does do blow-off tops very, very quickly. And of course, there's only been bad news coming out of China for a long time with slowdowns, money printing, bankruptcies in their home developer space, of course, with Evergrande. And of course, and you still see the Chinese market continuing higher here. It's got 24,000 to overcome here on the Hang Seng, which is a combination of the mainland China and of course Hong Kong. And Japan also pressing to new 34-year highs again. Some fresh highs here, getting close to those tops again. India, emerging markets, basically your altcoin space, some nice higher weekly closes here for India. So here comes your blow off top winner's curse phase of the 18-year real estate cycle. Of course, this is the theory that I've been using on the channel here for several years. It's kept us on the right side of the market, things continuing up, but we're getting very close to this top here. There of course is still more time to go, but I would just be getting to that cautious phase depending on which stocks or assets that you're choosing to invest in. In the case of commodities, several are moving into fresh highs or consolidating at all-time high prices. In the case of gold, of course, between 3,000 and 3,500 points. That's at some fresh highs here. Silver is breaking out into 13-year highs, now at $36 an ounce, breaking that top of September 2012. The previous all-time high was in 2011. So we are 14 years ago was the last time silver hit a new all-time high. And that was it for a round number, call it $50 an ounce. This time, I think we're probably going to go to a new all-time high. I don't think we're going to reach all of the headline titles, just like with gold, where they're looking at 10,000 an ounce and all sorts of thing. But that's the same thing's going to happen here for silver. People are going to be starting to scream $100 an ounce. They'll be screaming $200 an ounce. They'll be screaming whatever stupid number that always happens when we get to these blow off tops phases. And we've seen that, or we are in the process of seeing that now with metals, your precious metals, things like copper as well, industrial metals, which have hit some fresh highs. It's all part of that end game into the winner's curse phase and into that peak of the cycle. Now, the other thing that's going to be very difficult for this cycle is the interest rates. And this could be the straw that breaks the camel's back. I've got to get my, I don't know, one of these sayings right. We're at 99.9%. There's going to be no cut in the next 9 days here. So the next meeting's in 9.5 days. And this time, this is an increase. Now, it's only 0.1%, so it's extremely unlikely it's going to happen. But even just a few months ago, it was like impossible for people to think there was going to be an increase in the interest rates. However, now we're seeing a lot of pressure that the market is quote unquote breaking, and you've got the yields continuing to rise here, the bonds continuing to fall and closing at fresh prices. So it's going to be a bit of a struggle for the Fed and the government come the end of the cycle when people have got a lot of money borrowed and they've got no way of making things easier for people. So I think that's going to break things later on, but of course we'll have to wait and see. Now that takes us back to Bitcoin and the crypto data here. Of course, we've tracked Bitcoin. I think there's got further upside here, looking at the 120s up to the 140s as the first targets once it's time to break out. For me, at least, I don't think it's been time because we saw spikes on the ETF flows towards those peaks. You can see here on the 22nd of May, near those all-time high prices, 112,000, ETF flows were at their highest. Generally, when this happens, you can see that the Bitcoin price peaks, and it's only from breakout positions like it was in October and November when you have extreme inflows. That one there is basically continuation until you get to more extreme, basically the latecomers, and they start to put in fresh highs, basically just spiking the price up into the tops, and then you need the recovery of the market. You can see it happened back in March 2024 and again in June 2024. The search volume is dropping off a little here, but still not at critically low levels. So the interest is pretty well low. The positioning of the price is at a pretty good level. So overall, it's nothing to be concerned about. And the USDT dominance has closed just under the 50% here by a fraction, or in this case here, it's looking like it's dead on the 50% at 4.75%. It did reject off the short-term 50%. You can see coming up here at 4.97. So that's a good sign there. But again, I think it just needs a little bit more time for the money to decide where it wants to go. And I think medium to long term, we're going to see a breakdown here and more of that money flow into BTC. The place that people keep trying to call for money to come into is, of course, the altcoin market. Here's your total 3. So excluding BTC, excluding ETH, basically trying to call for an alt season. Again, there's not really much to say here that it's going to happen anytime soon. My number I'm looking out for is 950. So I have looked at the 50% level here at 910 billion, but yeah, really looking for a clean break of these swing tops here, 947, 950 billion dollars. That's pretty much where the market's been rejected now from since February. So a clean break of those levels could at least give you some playing room between 950 and 1.1 trillion dollars for some of those stronger alts to go a little bit crazy. Now I've got a couple of pieces of hopium here for the end of the video, but if you want to know how to navigate the cycle or basically put your plans together for the peak and then the correction, TIA Premium is a link to this in the video description. My brother Michael here, I'll get to his analysis in just a sec. But I think we could be on this sort of time frame here, looking to break out into this belief, thrill, euphoria, but it is taking a little bit longer than many are, expecting and that they can hold on for. But provided we don't break down from any of the key levels that I mentioned in today's video, then I think we've still got this bigger move to come. I'm not saying that this range is what to expect of Bitcoin. I'm not saying we're going to go another $120 odd, $112,000 to the upside. No, I'm just looking at this in terms of the emotions to come in the market. I think there's probably still some belief, thrill, and euphoria to get to these peaks. The Elliott wave also suggests this. So this is from Michael looking at the correction into a bottom of wave 2 and then a wave 3 that essentially is the strongest move. So if we do get this low and then a move higher, whenever this next move higher comes, it is going to probably, what are the sayings, melt faces, rip faces off. That one there is generally a really, really strong move to the upside, another correction, and then you move into that final peak. So we're not far away from that now, in my opinion. I think this is, well, obviously it's going to happen in 2025, but I think this is coming more like Q3 in 2025. So thanks again for joining me. That's our update for this week. Insane blow off top. So far can't see it any other way based on basically every other chart happening in the stock markets, happening in commodities, and of course BTC also lining up there. More on this in future videos. Like and subscribe. I'll see you guys back here real soon. Cheers.